Hello friends, good evening. Hope you all had a very good day and I wish the same to continue. Today's video is about how to trade into energy sector, that is on crude and natural gas, and what are all the aspects that we should be considering before entering into energy sector. This is kind of a theoretical class, but it will be very useful. Trust me, by end of this video you will definitely come to know the things about energy sector which you never knew already. My advice or suggestion would be that you should be knowing all this data before entering into crude or natural gas. Yes, let's get into the topic. First and foremost is the COT data. What is meant by COT data? COT data is nothing but the commitment of traders report, and this is published by US government. What is the use of it? So this data actually explains the smart money's overall positions with respect to their long and short orders. Smart money in the sense, nothing but the financial institutions, the large players in the market. They are the one who drive the market, and this is in specific to US financial institutions. There is no surprise that we are following them, because whatever the scripts we are trading, crude, natural gas, anything in respect to commodities are nothing but the derived values. They are the major players and we have to follow them. Only then we'll be able to succeed in this market. And the saddest part here is almost 95% of the retail traders are unaware about it. I am talking in respect to our country. As far as I have inquired or I have spoken to them personally, none of them knew about this. And you know what? Even the brokers, they also don't know about this. Even the calls providers and some technical trainers, they also don't know anything about this. My question to all of them: so how we are going to trade without knowing all this data? How we are going to trade, or how we are going to teach, or how we are going to provide calls? This is really very bad. This is something fundamental that you should be knowing before entering into any trade, because being a small retail trader, you can never go against a financial institution in this market, and even if you go, you cannot win. Definitely you'll lose. They are the winners and you should be by their side to win this market. So where you can get the COT report, the link is given here. This is the official website from US government where they will be publishing the COT data. When you scroll to the bottom, you can find all the various exchanges and the COT data updated there. You have to go through each and everything and you have to come to a conclusion. If you want it by any easy means, then definitely this is my website where I have a special wing for COT reports itself. You can look into it. By Saturday, I'll be updating this data. Even the government site will be publishing the data by Saturday early hours of IS. And most possibly, I'll try to update the breakdown of that report in my website by Saturday. This is something what you should be considering. Next is about the rig count. To give you an example, it is something like the weather forecast. Yes, obviously when you're seeing the news channel, by end of the news, they'll be reporting about the storms and tides set up in the ocean, and you would have listened to the final comments stating the fishermen are requested not to enter the sea. So which means they have already predicted something bad is going to happen there by this time, and they are making people aware not to risk their lives, right? Same way this rig count is also. This will be giving a detailed report about how many active rigs are engaged in drilling crude oil and natural gas. The government will be well aware about the forecast, like what would be the demand and supply in near future, and accordingly they will be engaging the rigs actively in production. So if the government is engaging rigs, which means there is going to be a demand. So to meet that demand, they are engaging the rigs. There are chances that prices may shoot up. And on the other hand, if you see the active rigs to be disengaged, which means they have already forecasted a lesser demand than usual or than current, and this is an indication that prices may come down as there is no demand. This is something, an outline. You have to analyze that with respect to COT, and finally you have to apply it with your technicals. When all these things are matching, only then you should be entering the trade. Matching in the sense, by using all this, if you are able to derive the maximum probability of a script's movement, and if you see the patterns and structures in favor of you, then definitely you can opt for the trade. The link for the rig count data is given here. This is that website. Last week's we'll see what happened. So last week on Friday, another important point is on Saturday early hours of IST we'll be getting this report. So what happened last week was oil rig count was increased by 4 and gas rig count was decreased by 4. You can see that, right? This and this. So what happened this week? Crude oil prices were higher and natural gas prices came lower and again started to move up now. So there might be a change would have happened as of now, and we'll come to know the data by tomorrow early hours. Let's wait for it. So next is analyzing crude oil inventories. I got many pings and I got even a comment to analyze the breakdown of crude oil inventories. So let's get into this. Here two types of market movements will be there. One is people sentiment and next is with respect to the data what it came. So here you have to consider about 3 parameters. One is the previous data, what is forecasted and what is the actual. Previous data is nothing but the last week's actual and forecast is nothing but what they are expecting. Here in the sense it's nothing but the EIA and API's expectations, like their forecast with respect to the stock what they have, and actual is what is being published. And do you really think they are unaware about the actual what they are going to publish and they depend only on forecast? I don't think so, because even the data is prepared by them and it is published by them. So how do you expect them to be unaware about forecast nor the actual? It's very well known to them and it is even known to the major players, that is the financial institutions. Only the retailers are unaware about this and they are using this scenario so that looking into the data, the retailers will get panicked and they will look for a quick profit at this time and they'll enter the trade. So that is where they can play and swap away the retailers' money. It is better to avoid intraday positions during inventory days. However, positional traders analyzing the trend properly and the data, you can definitely hold your positions. It will be in favor of you only. Okay. So we'll just quickly analyze the last week's report alone. The forecasted was minus 1.288 million barrels and the actual was minus 1.081 million barrels, which means than forecasted they have a good stock. This should ultimately bring down the price. That is why they have given it in red color. But however, the price went up. The forecast and actual is nothing but the people sentiment. Previous and actual is the correct data. So what is with respect to previous and actual? Previous was in positive, that is 0.822 million barrels. With respect to the actual, it was minus 1.085 million barrels, which means the inventory which was in positive went into negative. This shows there is a demand. Because of that, the price rose up. What happened actually was on the inventory day, the price started to go up. However, people started to see the data in red color and they started to sell, saying it will be coming down. But the price never came down, it went up. So was this previously predicted? Yes, it was. It was already given in this website where they have increased oil rig production by +4. I have even mentioned in the COT report that the smart money has increased their long positions by 57.7k orders. When you are strong in these both COT and rig production and technicals, definitely you will be in buying side, and that is what I have mentioned in my other videos also. Crude oil is in longer trend and however there was a correction expected to reach the maximum target. Yes, still we are expecting that correction. These are the things that you should be considering before entering into energy sectors for trading. I hope almost majority of people who enters into natural gas or crude oil just enter in a mindset, I will be able to capture 20 points, be able to capture 2 rupees in natural gas. That would be your mindset. And I don't think so people are bothered to view all these data before entering into trade. So my sincere advice here is don't treat trading as a gambling. Definitely, there is opportunity for the technicals and other data to play that can yield you good profit. Always stick to it. As I always say, it's your hard-earned money. It is your responsibility to invest it in the right way. Safeguard it. If you are not aware about all these things, all this data before entering into script, on what basis you are entering? You are just entering to give your money to the financial institutions and other professional traders. That is nowhere acceptable. Always learn, know about the script, know about technicals. Technicals in the sense it deals with patterns and structures, and those are nothing but people's sentiment. If you are analyzing any candle or pattern very closely, it is nothing but it is formed because of people's psychology. Technicals, you should not be mugging it up, or you should not be blindly going through it and following it as a theoretical way. No, it is not the way. You should be following the technicals in a psychological way. You should approach it in a psychological way. You should be able to feel it before taking any trades. I hope this data and information would help you in analyzing crude and natural gas. Let's come to analysis of crude and natural gas. So crude is trading at 4,350-51 ranges as of now. It has already broken above the range and it is trading well above it. But however, I don't see a considerable push or long candles. Crude was following a trend range all these days and still it is within the trend range only. Based on that, we are expecting a correction somewhere between 4,225 to 4,200. Once it reaches there, seeing the reversal pattern, we can go for buy. As of now, we are expecting a correction. Might take another 2 or 3 days. Next is natural gas. Natural gas, as I have mentioned in my previous videos, it was following a clear downtrend, and after that it started its range bound market. It is between 168 to 170 will be the selling range, and 160 to 158 will be the buying range. Last time the high was 168.90, and when it came down yesterday it was 159.20, and again it is trading at 165.80. So overall its next movement will be towards 168 to 170. Once it reaches there, then we'll come to know whether it's consolidating or distributing. How this range can be analyzed further. My expectation on this is natural gas is going to be ready for a very big move very sooner. People who are ready to invest, who are interested to invest in natural gas, please understand my point. It is investing, not day trading. People who are ready to invest in natural gas, keep ready your capital. Definitely good time is about to come. I hope this video was informational to you guys. If you like it, just give a like. If you are interested, you can subscribe to my Telegram channel, which is free. I have given the channel name in the description and other details in my website. Thanks for watching, guys.